if you're a mortgage holder, let's get some clarity now. Are rates going to go up again this year? Are they going down next year? Judo Bank economic advisor Warren Hogan joins me now. Warren, inflation data yesterday seems to have thrown everyone, including the markets. What is your prediction now?
Yeah, good morning, Laura. Well, we're definitely not going to see a rate hike next week, and that was the fear that we've had for some time. But the numbers yesterday were not the trigger that we were looking for, or the RBA board would have been looking for, to say, look, we have to go to take care of this inflation. They were great numbers, don't get me wrong. Inflation's still sort of around 4. It's stopped falling, and there's still really a cost of living crisis going on out there. But it's bought the RBA some breathing time and bought mortgage holders some breathing time. The question is, are we now going to see inflation drift off, the economy remain soft, and then the RBA eventually being able to cut rates? That's pretty much the market view. Many economists will have that view now. In fact, markets are pricing a rate cut for in a couple of months' time. It's been a big swing in the last 24 hours, but I'm not so sure that we're going to shift that way that quickly. The risk in this economy is still that inflation does not just go away and that the interest rate's not high enough. So we can't rule out another rate hike at some stage. It's just not going to be next week, and probably not before November.
Okay, so riddle me this, because inflation numbers, it's not great. It's still 3.9%. It's far away from that target band that the RBA and the government wants inflation to be in. Why did the market swing so wildly here on their predictions? Because it was just 0.1% off being the 4% that it predicted.
Yeah, I mean, it was a pretty amazing reaction from markets, particularly the interest rate markets, the bond market. The short-term bonds just collapsed. And I think it reflects a few things. One is that overseas bond yields have been falling in anticipation that the Federal Reserve is likely to start cutting rates in September. And we got confirmation of that about 4 hours ago when the Federal Reserve had a meeting. They didn't cut, but they basically said we're cutting the next meeting next month. But the Aussie market hadn't participated in that fall in term interest rates because there was this fear that the RBA might hike. And as soon as that fear was taken away at 11:30 yesterday, it just unleashed the market. So an overreaction for sure, but of course that's the way markets work. They sort of realign very quickly.
Yeah, they're a little fickle from time to time, always. Warren, I mean, when we look at what's happening in the US, we're usually about 6 months behind the US, give or take, and we don't exactly follow that path. I'm not suggesting that, but everywhere around the world seems to be now on this path to be cutting rates. Are we on that path too, do you think? Or, I mean, a couple of months ago, you were still predicting a couple more rate rises this year. Have you changed that view?
Well, look, I'm technically still predicting it because I'm going to wait until we see what the Reserve Bank says next Tuesday before doing a proper review of the forecast. But look, there is a chance we're on that path. There's no doubt about that. The economy is soft, particularly consumers. We're creating a lot of jobs though, and businesses are hanging in there by and large. The problem we've got with saying we're on that path, we're just 6 months behind, is the RBA never raised the interest rate as much as these other central banks. And the question becomes, is that cash rate actually high enough to bring inflation down? And what we thought was going to happen in the last 2 years was, because we have so many variable mortgage interest rates, so much exposure in the short term to rates going up, that the big lift in rates we had would knock this economy off its perch, so to speak. And it hasn't happened. It's certainly had a big impact, but it doesn't look like it's had enough to get inflation back down to target and get rid of this cost of living crisis. It may, but that's the judgment, and that's what we're going to find out in the next few months. And I think the other thing that we shouldn't lose sight of is we've just going to experience $40 billion of fiscal stimulus hitting this economy from 1 July. 25 of that's tax cuts, then there's other measures. And if that sort of reboosts the consumer, fires the economy with inflation still well above target, then I think we'll find out that the inflation rate's not coming down and the RBA will have to do more. It's all up for grabs. We're going to know a lot more in the next few months.
Warren, thanks so much. I really appreciate your time.
Thanks, Laura.